Stock of the day, though, I thought I'd look at, I think one of the most unloved retailers. Some would call it a bit of a dog over the last decade or two, I reckon. And that is Myer, the big department store. It reported today it's been cast aside in recent years. But is it time to start looking at it more closely? It released its financial year 22 results. Sales up as much as 12.7% compared to the previous year. Online sales popped up by more than a third. Myer saying it should finish the year in positive cash territory, around $155 million, inventory being well managed. Stocks in the green today. Who would have thought up, 22.5%? That looks impressive until you realise it's just 9 cents and the stock price is 49 cents. Scott Phillips, a great Australian retail brand that has just been destroyed over so many years. What do you think? Is it worth putting Myer back on our radar?
Such a great story, the Myer story, Koshi. One of those great immigration stories, building a retail empire back in the day. So a wonderful story. I want to say a wonderful business. Has been a wonderful business for so many years. Left for dead by two things. The first was the introduction of the shopping mall, the shopping centre, the Westfield, the modern Westfield. Myer once upon a time was the only place you'd go, because you go downstairs for the food, you go upstairs for men's shoes, women's dresses, whatever else you wanted. It was all available under the one roof. That was the great thing about a department store. And then shopping centre said, I'll see your department store, I'll raise you by a factor of 20 or 30 times. And today's Westfield and the like are the result. How do you compete in that sort of environment when you can go across the shopping centre to get different clothes, different shoes, different entertainment, games, food, all that kind of stuff? The second course then is online. The great news, let me be a little bit kind, that online sales growth is really good. They've had quite a few years now of compound online sales growth. I'm not entirely sure that won't be enough to save the business in some form, because at the end of the day, if you have a nationally recognized brand name, you're a go-to place. If you get your search engine optimization half right, search engine marketing, you get some of your online stuff right, there's a business there. And if you're looking for somewhere to shop, it might be Amazon, it might be Kogan, it might be Myer. It's in that range, right? It doesn't need to be as big as either of those two necessarily to make a few dollars. So that's positive. The problem still remains their physical stores. There is just not enough business to go around for some of these department stores. I spent a few weeks in the outback in New South Wales and Queensland recently, at a Dubbo and Parks and Orange and plenty of those places besides. The location for some of those stores is still just doesn't have the population you need. Between online shopping, as I said, and the rise of the shopping centre, Myer's got too many stores. It will have too many stores even if it halves the number of stores it has. It needs to go back to a capital city, great place to shop, day out kind of experience. The days of winning in the suburban shopping centre are completely over. Yeah. So it's still halfway between. It's neither horse nor cart. It's somewhere stuck in between. It's got some hope. The share price now, by the way, after that 22% gain, is back where it was in 2018. and still miles below what it was every day before that. Still nursing massive losses if you bought at the IPO or most of its life. These are good numbers though. This buys it time. That's what it needed. Profitable. Online sales growth is good. It's got some more surgery to be done. I wouldn't write it off. It's not worth nothing. They've proven that, so that's really positive. But am I buying it? No. I think it's going to have to shrink its way to greatness. There is a business left for Myer. The Myer brand, at the very, very least, is an online play, and maybe some of those really iconic destination city stores. But until it gets back to that, you just don't know what you're buying. And the chance that they continue to erode sales, particularly as the economy starts to tighten, I wouldn't be buying it today, no.
Chris, what do you reckon? Great retail brand. Retail got disrupted. It was just so slow to react, wasn't it?
Yeah, it's been a dinosaur, Koshi, and Scott's spoken very eloquently about it and made some really good points. To give you an idea of how far this one has fallen from grace, there are no major brokers that cover it, and until about 15 minutes ago, the results hadn't even been written up in the AFR. I'm sure the Ausbiz team was all over it, but they're just not headline news anymore, if you know what I mean. So, again, I would echo what Scott said. Today buys them some hope, and it buys back a little bit of trust that the 5-year plan that we're about 4 years into now is making some inroads, and some fairly meaningful inroads, to be fair, once again. But again, I agree with Scott. They need to get rid of a lot of stores. They need to grow their online presence, and they're starting from so far back. And I've said to both of you on the show before when we've talked about Myer in the past, unfortunately, Myer is the best of nothing. And what I mean by that is when you think about retailers, like if I said to either of you, we'll talk about one of these stocks later, if you want to go buy a new TV, it's JB Hi-Fi or it's Harvey Norman.
Yeah.
Myer is not the thing that comes first to mind when you're talking about just about any product. They do a lot of things adequately, but they don't do anything great. And I think you have to be great if you're going to survive in the retail landscape at the moment.
I reckon that's a very good point.